Alright guys, welcome back to another video. In this video, I want to do a daily analysis on SPY, which is an ETF of the S&P 500, and why I think that there is still more room to the downside given the recent price action that we've seen early on this week and at the end of last Friday. So let's get right into it. First things first is obviously the S&P has been in a long uptrend since the beginning of the year. It's a channel that it's been bouncing from top to bottom, etc. Recently, though, that trend channel has been broken to the downside. So recently it broke down and then it bounced, correct? So with it being outside of the channel now, it allows room for the downside. That's as far as market structure goes. So a few key points that I'm going to point out to reinforce the idea of a short thesis is: one, we're outside of the channel. We've retested the channel, rejected the channel, and made a new low. So we've made a lower low, which is right here. Here's your lower low, right there. So swing low. We then make a swing high right here at 445. That's your swing high. All right. So assuming that we make a lower high, the bearish structure is still in play. So with two rejections, one on Thursday and then one today, that structure is still holding. So this is pretty much your lower high. So now what we're looking for is pretty much is a retest of this previous low. So probably envision something like this happening over the course of the next couple of weeks, especially if bad news comes out or is headlined in the news. So yeah, here's your swing low, your swing high. It bases out. They try to hold this area, the 430. They did a very good job of holding it, but you can see here that we could not get above and stay above that 440 mark. So two rejections on the daily, that's good enough to keep a short thesis in play. If we get above that 440, and especially we get above that 445, that short thesis is no longer in play. Let's go ahead and take a look at it on the intraday and see what two levels that I'm looking at. Let's see, two levels that I'm looking at are these 2 points of controls. It's this 434 and then this 430. We are currently in the overnight session. We're already below the 434 mark, which is good, assuming that we can hold below it. Short thesis is still in play. If you're aggressive, you can start building a short position around these levels. Obviously, keeping a tight stop, maybe around that 440 mark. If you sort of want to see more certainty in the direction that we're going to be taking, and sort of want to take a momentum trade on this, potentially do a break below this 430. Just keep in mind that if they say the 430 level, you have to exit immediately. So whereas if you were to enter above around these levels, you have more time to react because you're taking that earlier entry. So if you're entering around this 430 mark, you're going to have to be quick if it reverses on you. But I do see more downside to this, especially because on the monthly chart, we have that momentum from the last month. We have that bearish momentum. So I'm looking for this candle to turn red. So once we start getting below 431, this candle is now under a lot of pressure. Once we get under that pressure, we can start looking to see if we can crack that recent low, which was like that 426 mark. And at that point, it's pretty much a free fall until maybe that 420, 425 mark. Most likely the 420 mark, but not sure the time frame that this can happen. There's a lot of contingencies, but just be mindful of who has the momentum as of right now. And it seems to be that market structure is on the downside, and the bears are still holding it pretty strong. So I'm long if we get above 445. Otherwise, I'm playing stuff to the downside. So that is my thesis on